Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 1.7%. There on the S&P Nasdaq 2.6%, semiconductor 4, Dow 1, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are green today. Bitcoin up about 6%, gold, silver, miners are down, dollar down, oil flat, treasury bond down. The rates are up, VIX tanked about 4%. There, let's stick with the S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday. And looks like we actually saw a down gap this morning here. So this is where we opened. We opened lower. Thankfully, though, there's that micro-term moving average in that vicinity to be able to kind of capture that move. With the sentiment being so bearish, I think that down gap could have been very dangerous for the buyers if we would have seen some kind of a sell-off event breaking below this pivotal 384. That would have been a very, very ugly day. But buyers are very, very feeling a little bit easier tonight, knowing the fact that we did see that down gap filled in that first hour, and then after that second hour, we thrusted above the short-term moving average. Not only that, in that process, that down gap was fully filled.
Perfect.
And generally speaking, a lot of times when the gap gets filled, it's going to act as resistance, especially in this case, especially the sentiment being bearish this entire month of March. You would think that when the gap gets filled, you will see the buyers struggling in this vicinity. Today, though, you can see the short-term moving average swiftly reclaimed to the upside. The short-term moving average did act as resistance just yesterday, and things got very, very hectic. I mean, 2 days ago, things got very, very hectic. When buyers made a move, this was a big gap up too. That short-term moving average was not liking that, not supporting the bulls and rejecting the price. But this time around, quickly that short-term moving average yielding to bulls' wishes there and broke above 393 on that third hour. The 393 is an important pivot, important neckline. As buyers are going to argue that this is a double bottom reversal pattern, neckline being at 393. That's the last known lower high. So by breaking above that 393, one can argue that we might have that higher high establishment, at least in progress of that. And that might be true if we cultivate another higher low in the coming days or weeks. So with that, third, fourth, fifth, sixth hour, we did march higher. Keep in mind that mid to midterm moving average played that crucial role just about a couple of weeks ago. As you can see, I mean, things got extremely hectic for the bulls here once that midterm moving average was not reclaimed and the midterm moving average supporting the sellers. Well, today, that midterm moving average seems to be reclaimed here. At least bulls are trying extra hard here to reprogram that midterm moving average to possibly support the bullish cause. And we did end the day above the midterm here. However, the long-term moving average right in the vicinity of 397. Again, that 397 long-term moving average was teaming up with the midterm to act as resistance, right? That pivotal moment here before that tankage just about a week ago. So it's bulls' best interest. They must reclaim that long term, because you do not want to let any of these moving averages to be alive to continue to support the sellers, because things can still get very, very ugly here again with the sentiment where we're at today. Should there be any kind of decline? And again, just the way this market is moving, been moving this month and pretty much this entire year, I mean, nobody's gonna be surprised to see some crazy down gaps. And it's been one of those days and weeks and months where it's been extremely difficult to predict what's gonna happen next day.
No, sir.
So just because things looking bullish here quickly that sentiment can dwindle down. So let's say we see a downturn tomorrow. Obviously, 393 being that neckline, that's a level that bulls need to protect. But I actually think the entire 390 and 393 is a level that bulls gonna need to protect and have that short-term moving average. Now that short-term moving average has been reclaimed, and bulls are working here to reprogram that short-term moving, that green dotted moving average to support the bulls. So let's say we do see a downturn in the next day or two, then you do want to see that either 393, that prior swing high resistance acting as new support, or that short-term moving average. Keep in mind, the short-term moving average, right, is a pivot now, meaning prior resistance could act as what? New support at 391.81. So that 393 to 390, that band of support must be protected if the bulls want that continuation with the higher lows and higher highs. So check out that oscillator. So as you can see, the oscillator is going into tomorrow favoring the buyers here. Perfect. So I think what's the important thing about this oscillator is as I zoom in here, you can see we did slightly get above the previous swing high here, right? You can see that that's a slight higher high. At least that's a better sentiment than where we're at just a couple days ago. You can see it looked as though when we're here, when we closed here, it looked as though bulls had one more day of a bullish turn, similar to what we saw right here, right? It looked as though we're going to see another turn. However, we saw that abrupt down gap and that oscillator crossed right back down. But again, the bears failed to bring that oscillator to the bottom of its band. And with that, we prematurely crossed up in the middle part of it. And what happened was now we have the higher lows and higher highs going on the oscillator while the price is doing the same. So you can see when you see that oscillator and the price actually moving together like this, it's generally telling us a direction of the market. A sentiment is the favoring the buyers going into the next day. Perfect. So obviously the oscillator isn't overbought here. There's still another day of upturn remaining. Bulls are not tired. Again, that was the case just a couple nights ago. So we don't know how exactly it's gonna pan out, but there is another push of energy remaining for the buyers. And it's imperative if the bulls don't want to see another tankage to the downside, it's imperative that bulls need to reclaim that long-term moving average, right? Because the long-term moving average, last time when it wasn't reclaimed, things got extremely difficult, and go after that 400 resistance. I'm coming back for you. We'll reassess the situation. Enjoy evening globe trading tomorrow.
10 minutes later.
We actually been tracking, talking about this bullish divergence on the daily chart. We're currently looking at spider daily chart here, not the 65 minutes. So we're looking at a much bigger picture here. So as you can see, not only we saw 65-minute chart bullish divergence, now to add to that, we actually have daily chart oscillator bullish divergence, which is very similar to that October lows price action. We got definitive lower low here on that October price action, very similar to what we saw just this month of March right here. You see that definitive lower low. What happens is though, that that oscillator fails to put in that lower low, at least an equal low. But what it does is it will put in that higher low here, right? Again, it's the lower low on the price action, higher low on the oscillator, right? Lower low on the price action, higher low in the oscillator. And looking at the oscillator here real quick, as you can see, it looks like we're just trying to cross here. We haven't fully crossed yet, but that's kind of what it looked like back in October right here. And when that confirmed, right? It's not fully confirmed as of today. When that fully confirmed, what happened was, this was right about here when all the moving averages were claimed. You can see the moving average cross right here. And that's the moving average cross right there, right? That's micro term and short term. Another, you see that? So we've been tracking not only the bullish divergence on the oscillator, we also been tracking that moving average cross, because every time when we see that a confirmation of that golden cross here and those moving averages, the market did rally for about a month to about 2 months or so. We are not seeing the moving averages crossing to the upside yet. We do see, however, that that potential bullish divergence on the daily, it's not been confirmed as of today. So as you guys know that on Fridays, there's no YouTube video. So what I do for my mini members on Fridays or weekend is that I'll look at the 65-minute chart analysis on Fridays or on the weekends. And then I'll flip to the daily, that what you're seeing screen right now here. And then we'll track some of these things, what we've been talking about this entire month of March. And so right now that membership is, going on here. So take advantage, feel free to take advantage of it. You think this is helpful in your own, navigation of this market. If you're a long-term investor and you want to learn how to navigate this market more on a long-term perspective, do check out my full membership plans below. I did lower the rates quite a bit, understanding that we're kind of in a semi-recession here since 2022 and this year. So I've lowered these rates quite a bit here this year. So this is if you're aspire to be a position trader, long-term investor. So recently I released these two reports here for my members. These two research reports with any tier, not for mini membership though, but for any full membership plans, as you see here below, investor, premium, or VIP. You get these two reports here. This one right here, see the matrix? Can you? While others can. This is a chart for the long-term macro view. There's the signal that appeared about a week or a couple of weeks ago. This signal has never failed, and I'm explaining what this signal is, what might be the implication for this market going forward. So this report is available for any tier, along with this report here I've done early February. This is comparing for 1982 to 2023. As you can see, very similarity here. So if you're interested in these reports, any tier membership will get you these special reports.
It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd, because this is not a business where you take polls. It's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.